Capital isn't just about raising money, it's about the science behind it. I cracked the code. I've faced rejection and I've developed a system on how to make capital accessible to everyone. I've been doing this for a long time, over 30 years, over 30,000 customers and counting, close to $1 billion of capital raised from equity to debt. I have a lot of experience doing this and I've cracked the code. And I want to share some of my secrets with you and how I've done it. Full transparency of how I got things done. My story comes about my childhood and how I was brought up in a very working class family. Both parents worked very early in the morning. I know my dad always left for work. My mom was a school teacher. And I was surrounded by a lot of people with money. I lived in a very affluent area. So I was always curious, kind of didn't really understand until a little bit later in life of how things worked, why we didn't go to the country club. And I was put into good schools by my parents. I was always surrounded by wealth. And it piqued my curiosity of how come they were wealthy and I wasn't. So I kind of dedicated my life to this and how people got wealthy. And some of that was they had to have capital. They had to have money to buy businesses or to be successful, maybe as a stockbroker in New York or whatever one of my friends' parents were at the end of the day. So I went from living in an area of affluence, Fairfield County, and we were just working class part of town there, to Boulder, Colorado, Boulder County, to eventually to San Diego County, and I ended up in La Jolla, California. So there was a pattern there for me, and that pattern was go to areas where wealthy people reside and study them and understand their habits and behaviors. And along that time period, I was fortunate enough to get some mentors at an early age, in my early 20s, and I started learning how to do it. Of course, I got a ton of stories to talk about, good and bad. Hey, I've raised capital, I've done deals, I've lost money on deals, I've lost capital before from people, but I keep coming back. And a lot of that is due to the fact is how I communicate with people and how I provide transparency and professionalism that I've developed over the years. But today is all about how to make capital accessible for you, to teach you how I did it at the end of the day. And it kind of really, it's just my experiences. It's a lot of my experiences. And one of the big things is the ability to overcome rejection. And this is one of the things I've developed, kind of a 12, not a 12-step program, but like the 12 commandments, I call it. And hopefully you understand what this is. It's 12 things I go by. And one of them is having the ability to overcome rejection 1,000 times, because you're going to hear a lot of no's. One, you're practicing your pitch. Two, you might not have the right product, so you got to learn this. Three, you might be talking to the wrong people at the end of the day. And how do you do that? You have to practice this, especially, this is a big thing right now. We're in 2026. How I raised capital in the 1990s is a lot different than how you raise capital today. And there's an economist, Howard Marks, says if you're doing the same thing that you did in the last market cycle and this market cycle, that's the definition of insanity. That comes to raising capital, how you talk to people, how do you pitch people, how do you do things. Granted, there's a lot of experiences I have, and I believe those experiences will help me teach you how to craft your pitch in today's world and how things are. Today, it's coming at you a million miles an hour every second. Distraction, 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 trigger, 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 trigger. How do you deal with that? So, we're going to take some of my old school techniques with new school. One of the things that I was very good at back in the day, in the late 90s, is I went into the public records and I really did a lot of due diligence, let's call it research. And I had to pull those public records to find out who was financing transactions. I was taught a little thing that a lot of people like to put their name on deeds of trust, people's homes, properties, and they did this to really secure their collateral in the investment. Whether they invested in someone's business, they invested in real estate, whatever, gave a loan to somebody. I was taught people collateralized properties, and you could pull those public records. And people did it outside trust back then. There weren't a lot of trusts and a lot of LLCs, so a lot less back in the day. Now you have a lot of those trusts. You have a lot of LLCs. You see everyone kind of out there promoting those services. You have to break those trusts and LLCs, and there is technology out there. You can do that and skip tracing. But back then, there was a lot more people. They wanted their name on it. They just felt good about that, the investor did. So you could scrape that public record, and you could find their telephone number. So, and then you had that information. You had, hey, this is how much money someone invested. hey, this is their name, this is their address, this is their telephone number, and you just give them a call. And so the one, I'm always go back to this word is confidence, is you need to have confidence yourself. You give them a call and just call them up and say, hey, I noticed that you're an investor. I sell investments. Love to have a conversation with you. What do you invest in? Are you actively investing? Tell me a little bit about it. In some cases, it just could have been a personal loan to a friend. I'm sorry, it's just a personal loan to a friend. Would you care to talk about investments? I have investments here I could sell you and love to talk to you about it. Another thing could just be, yeah, I do this for a living and this is what I do and this is how it works. Listen a lot, ask the right questions, get that feedback, write it down, stick it in your database, right? And again and again. Well, I did that. My first 500 investors came from that. And then I had a couple of mentors to open up their networks. But I say that they open their networks, 5 to 10 people, each of them, 5 to 10 people, you run out of money pretty quickly. If it's 5 to 10 people, back then, most people I had as investors, pretty much they would do 100, 200 per transaction, but they're really good for $1 million to $2 million. So they were more professional investors. And so I knew when I reached out to them, I could do something again. And they bring a group of like 3 to 5 people at the end of the day. And then we do a little bit more together. And if it worked out, they share with their friends, but it would stop. It would not get more than 10 people. I'd never get more than 10 recommendations from one person. And that's from one person recommending someone else and them recommending someone else. That's a good thing to understand because everyone thinks I recommend this person, they recommend this person, they recommend this person, they recommend this person, and it's an infinite amount of referrals. That's not kind of truth when it comes to money. There's not a lot of people don't know a lot of wealthy people. They know like 1 to 3 max, and they have to kind of be at that acumen level. So that's kind of one of the things I learned. So then create these little, I call them nodes and pockets, and constantly doing that again and again. And then if you're in the industry, sometimes you hear people investing in some firms and they stop investing in firms due to just communication issues, relationship issues. If you've been in relationships before, sometimes they just don't work out. So just be kind of Johnny in the spot there and just be like, okay, if you go to an industry event, sometimes they show up, introduce yourself, and investors will jump different firms and in some cases, different products. And we get that a little bit later on. But again, I'm here to teach you how to raise capital. There's a science behind it. So I'm giving you some very valuable information. I'm saying, hey, what did I do? Okay, I went to public records. I went to properties that they recorded deeds of trust. Back then, sometimes they recorded the notes to the property. Some people just like it. And I was able to get the information. I was able to get their personal information. Then I'd give them a call, right? Now, some people say it's a cold call. I just said it's a call. I'm calling a prospect. That's the way I look at it. And it's a qualified prospect. Hey, there's a recorded deed of trust for $500,000 against this property. It's a commercial property. I have the person's name, address, and phone number, right? Back then, it's more home numbers. Now it's all cells. So things do change. But those are some of the basics that I did to get it going. I got 500 investors out of doing it that way. 500. Something that I was taught shouldn't be scalable, I scaled. So granted, when I have mentors, right now in my early 50s, these guys are in their 80s right now. They're old school, right? They did a lot of stuff through relationships, and they said, Craig, hey, here's something I'm going to teach you, but don't share it with other people. Now, they never had the greatest intentions. They always like to make things like one way when they did things. I kind of wanted to make things more 2 ways, meaning that both people benefit from doing it. They did it in a way where they only benefited. It's a whole nother conversation. I'll do that, a whole nother podcast about that later on. But, nobody, and that is something that kind of I learned. It's like, hey, it was supposed to be closed doors because this is the way we make money. We don't want to teach anybody else how to do it. And I was like, okay, I was listening as a young guy and I was just kind of soaking it all in at that point in time. So very, 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 there was a science behind it. And today you could say data, scraping public records is the same as data, is going out there. So what is your persona? Who's your target? Now get back to what I said earlier. What I said earlier is this market is different than the previous markets. So I could have gone back in the 90s. This worked in the 90s and early 2000s. That doesn't work today. So we have to try something differently. So today, a lot of people are probably listening about raising capital for a company now, or venture capital for a startup, or real estate. Those are kind of the big 3. And I'd like to kind of bump private equity up to the top and drop the other 2 because I think it's a great opportunity to buy companies today, get an SBA loan. I think if you get an SBA loan, that says something about yourself. The bank believes in you, and I think it's a little easier to get that equity from somebody, whether it's 20% of the purchase price, wherever that is. So we could get that a little later. I think that's a great product to learn how to sell. Venture is going to be tough today. I think with AI, it's these large checks from these institutions. You could get retail stuff, maybe kick an idea off the ground. I think that's going to be a little tough in today's market. Again, we're looking about today, not yesterday, because yesterday everyone invested in venture. There's platforms out there. I think the largest venture capital platform out there is Start Engine. Call up a customer from Start Engine. People have invested in Start Engine and ask them what they think, what they do. Do they like it? Do they understand it? Do they understand this is the long term? Do they understand the risk? Maybe 1 out of 20 make it. Or are they kind of a little bit out there thinking like everything, they're so smart that everything they invest in is going to turn into $1 million, which a lot of people do when they invest in venture. So venture, you got to kind of match the expectations there if you're raising capital for that. And that's a whole nother, well, I'll get that in this podcast about, I call it investor suitability, right? So we'll go into what that is. And institutions are a different beast. If you want to do that really comes from a network, having a really good network to get, or having just explosive idea, which is 1 in a billion, right? So let's be realistic here. And at the end, real estate, of course, is real estate. At the end of the day, raising capital for real estate, you have to show them a great deal right now. You really have to show them a great deal, very low risk. And at the same time, you have to show them yourself. You're the person to invest in. So, let me take a step back. And I really kind of classified investors in 5 different categories. And one of the biggest things from the categories I didn't learn this over the years. Remember, I've been through different market cycles. In different market cycles, I've seen different behaviors, different investors pop up. Right, I had the 90s, early 2000s. And then after the crash in 2008, a lot of stuff started coming online, which online is a completely different beast than going face to face. So my 5 investor types were, okay, number 1 is yourself. Do you have money? Do you have revenue that you can pump back into your business or back into your projects? Or do you have savings, retirement accounts that you want to use for these type of investment vehicles? Number 1 always starts with yourself. Number two, everybody does number 2. I call it fools and family, friends and family. Everyone goes to their immediate circle. Now, that is a thing that's very easy to do, but it's also very tough because now that relationship changes. You're taking some of a social relationship and making a business relationship. That, to me, is very, very risky, and usually it doesn't work. Now, granted, a lot of people say it does work. It's not going to work long term. That's not a viable business plan. Maybe it gets you started. Maybe you get lucky and you have a couple turns, get your friends in, and then use that as a springboard to go outside that. So what's great about the internet and everything, investment clubs and groups, is then you got, hey, retail. Now, what I mean by retail is it's a person, right? It's a person who sees something, a person who has money, right? They have money, and what are they going to do with that money? Whether it's a business owner, whether it's maybe a doctor, a dentist, someone who's making money and wants to invest that money somewhere, an executive, right? So you got to kind of like hone down who's that retail investor and what's the best kind of fit for you. And then after that, I call it a professional investor. So there's people with money who do it for a living. So they might be retired, they might even have a job and just do it professionally. I've known some people who've had jobs as engineers, quit those jobs and became professional investors and played around. I think one guy I know worked for Qualcomm, and I think he had like $2 million, and I didn't think $2 million was enough to quit his engineering job because he was getting paid well, but he did, and he became a professional investor. He went around to all these investment clubs, chasing yield. That's a good thing to know because that's investor suitability. We'll talk about that later. So, he had $2 million. I don't think that's enough to quit your job. That's my personal opinion. He did to be a professional investor. Now, they're all about greed. They're all going to be very tough to work with. This specific example, he needed the cash flow coming in. So he had to choose, but he wanted the yield. So he wanted this like 12 to 15% yield and cash flow, best of both worlds, right? It's just, that's a very hard thing to do. So he wanted to control it so much, but you can't really control the markets. The markets are the markets. So he was. This is why I said he should have a little bit more money, maybe $5 million, right before he quit his day job. He did kind of run into some rough patches because if one investment doesn't work out, he doesn't have enough money to live on. So you're saying, hey, I got 2 million. I need to make 200 grand a year. He's probably thinking in his head, 12%. So he's thinking close to a quarter million a year to live on, and then I could just compound that. But to live on in Southern California, it's going to be at least $350,000, right, to have that lifestyle. So that's greater than 12% return. I think you might be talking closer to a 15% return. And then you need all that to come in, and you got taxes and all that stuff. So he's got to be spot on. I don't agree with that. And the last category of that's the institutional investor, number 5. So those are my 5 different groups. Each group is a little bit different. Of course, I think if you get to self-funding, that's the best. But really, to get somewhere faster, you want to bring outside funding in. Maybe your money you need it to live on. You want it for reserves. That's good. Maybe you want to put a little skin in the game, like 10, 20%, and then get 80% from someone else. The real estate deals all the time. They want to see you put skin in, and then they'll follow the money. Yeah, 20%. I'd say 20% is a good margin to start with. This market's different, so they probably want more, 50%. Everything's like 50% across the board. Match to match. Again, market conditions change things with that. So it's like who do you have? Like, look at your network. You got to start looking at your own network first to do it. And that's a big step to raising capital. It's like, hey, and what do you need it for? So at the end of the day, they are buying capital from you. It's not your project. Yeah, it's the yield. They want to look at the yield. They definitely want to look at the yield. They want to look at the product. They want to look at the investment opportunity. But that's good. You better have your shit together and have all those boxes checked. Why is this a good product? Why is this a good investment? So I'm just going to assume that it is. Then it comes down to you. So when you're pitching them, it's like, can I get some money? How you doing? That's not going to work. You have to come in with the confidence too. If this is your first time raising capital, you don't have the confidence to forget about it. It ain't going to work. You need to be super confident. You're pitching stuff. And then, right, if you're confident, you've never done this before, you better have a great product because the risk is so much. Because what happens when something doesn't go according to plan? It will. It always happens all the time. Whether you miss a phone call from an investor, whether maybe it's a real estate deal and the contractor, I misquoted this one part of the budget and you're over budget on some things, which always happens if you've done it before, right? So did you pad enough in your numbers? Back in the day, I used to always pad 20%. So someone said, hey, it's $1 million in construction costs. I'd say, okay, 1.2. That's the kind of the way I was taught. I think a lot of people go, okay, 1.1 million, but let's be conservative here. Let's understand human nature. Let's understand global economics. There could be a supply chain issue. Hello, oil right now, Iran, right? So let's bake in those costs into the project so we know we're safe here. Might drill down that return a little bit. However, that's safe. And that's something that's very safe and transparent with people. People understand that. I'm pitching a product right now to people, a new one created for this market cycle. I said, wow, before we deploy that capital, the capital needs to make money. We'll have it in a money market account. The interest that comes from the account will be given to you. And then once we deploy the capital, of course, returns will come into you directly. So that's the way I'm packaging that today for people. So this is experience because when the money comes in, some people might say, okay, do I start earning that interest that you're selling right now? But if I'm not putting that money to work in my opportunity, I'm not earning interest. So how do I pay them? So these are the little things, little dots I could teach you how to connect across the board. All legal if you put it in the legal disclosures. Not only, I want to talk about legal disclosures too a little bit later on. Very, very important. And it's tricky. They trick you, right? So one, I'm going to tell you what not to do. One thing is what not to do. I've done this. I've solicited a lot of money from non-accredited investors. Do not do that. Unless you are willing to spend $100 million, do not do that. The technology is coming. It's almost there. Yeah, I'm building technology right now. However, the acumen's not there. These people need to stick to their day jobs, get a sales job, learn, become an operator, and an investor later. So when you're investing, a micro investor, I'm going to invest $1,000 and think it's going to be $100,000. That's like day trading. That's crypto. That's not what it is. Investors, nice. If you get somewhere between 10 and 15%, That's great. Some cases lower the risk. 7% some people will take. They like the diversification. Triple net leasing, right? If you're in commercial real estate, it's even a less of a return because it's very safe, stable asset with a stable tenant. Not sure if a lot of you know about triple net commercial properties. Again, that's a whole other conversation and go down that rabbit hole. We could talk about that a little bit later on. But what we're talking about here is just the nuances to it and how to structure a deal and how to disclose a deal. And you could put whatever you want in the legal docs. Of course, you got to make something that makes sense for both parties, but you put your fees in there, your costs in there, disclose everything in your legal docs. And when you're talking with someone, you have to be transparent. So the words that come out of your mouth have to match your legal documents. What kind of fees do you charge? I charge 2%. Well, no, your docs probably say admin fees, legal fees, accounting fees, bookkeeping fees. It's going to say in there all these little nuances of fees. Best thing to do is like, you know what? Hey, it's the typical fees involved. Here are my legal documents that has the details on this. I don't want to not be transparent with you. It's all in there. Or you could take them all out and stick them in a piece of paper, like a one-pager, and write down each one it is. It might scare the shit out of someone because you're showing them all the fees across the board if anything goes wrong. Because if you have a right attorney, he's going to say, hey, you're able to charge all these things, right? You want to protect you in case something goes wrong. And yeah, you might dilute the project, but the project someone has to pay the bills here. And you can put it all in there and disclose it. You're most likely going to freak the person out. So I would just recommend package everything in legal docs, give them the legal docs, tell them the page everything's on, say, and then match industry standards, right? Be within some guidelines. And if you're not within industry standards, you got to give them a reason why. So you could charge a premium if you're great. So, hey, I charge this. This is how it is. Go see somebody else. You don't like it, and that's that person's choice. Full disclosure really helps out. That's the honesty with people. Don't hide it. And that's, again, knowing your shit, right? You got to really know your shit at the end of the day when you're raising capital. It comes down to you. Again, go back to confidence and being able to answer every question and not be, I'll find out. And again, if you're raising capital and you have this opportunity with someone who has money, remember, people who have money and are investors move like this, and you got to give them all the answers. Oh, let me go find this for you. That I think is one of the number one killers of a deal. Anytime you have someone on the phone, in today's world with all this attention, you need to have everything, every question, every answer you need to have. Now, ideally today, I'd like to give everyone everything in advance. People don't read it once. So I'm going to do different methods. Text, I'm going to send them an email. If they're in an app, if I could do something where, hey, if I could do stuff on top of that, if I could push something. I'm not big on AI callers, using that for someone who's sophisticated. I think they're just going to hang up on it. I'm not big on using the AI text where it's going to have this conversation back and forth with someone who's sophisticated. I think it's going to be too personalized. I think it's intrusive. If they want something, they'll text me. So maybe I'll just text them a quick reminder. Email, phone call, right? Don't know if they're going to open all that stuff up, but if I do it too much, they will. They'll ignore it, right? So strategically reach out to them and understand them. Maybe they're online a little bit. Maybe it could be a little DM. Maybe it's a little just text reminder. Maybe it's a call. People still like calls at the right time. And at the same time, hey, email, and giving them kind of like an app. I would call it an app or a platform where they could go in when they want to go in and then monitor that. So when they go into it and you see them go into it, that's when you kind of strategically follow up with a text or a call. It's more about timing than anything else nowadays. And it's KYC, know your customer. You really have to know if they like a text, if they want a call, if they're going to read email, they want to go into a portal. So there's more to it today than used to before. I'm just going to call you and pound the phones. That doesn't work. And when you do get them, you got to know your shit. You have to have all the answers, being confident, because it might not come back. Yes, there is sales techniques involved. However, I don't think it's as much as you grinding and doing used car sales techniques when you're raising money. Here's an opportunity for you. You have a nice consultative conversation. What are your goals? Make sure they're qualified, right? That's a big thing, making sure they're qualified. build that rapport, drill that. Let's call that, said drill that. Let's build that transparency between both parties. So one is you and one is them. And look, if they're not being very transparent for you, you probably don't want them as an investor. You're building a relationship. You want to make sure you build the right relationship. Tons of stories about the wrong relationship on things. And being honest, you're building up. And being honest, like I said earlier, hey, I lost money in deals myself. I remember this deal in New Mexico. This guy was telling us we're working with, and I had a business partner at the time. Hey, we could build some land out there. Everything will look great. And we're trying to raise some capital. Potentially we have a partner there. We're going to build a bunch of subdivisions. And one of the things I'm like, hey, I got to put skin in the game. So I wired over about $10,000. I think another investor did 250. I think we're about 300,000 all combined. And then kind of, where'd this guy go? And called him up. I was like, hey, the deal didn't go through. So I was like, can I get my money back? And the guy kept saying, I'm wiring it back. And I'm like, okay, something's up here. So I ran around. I'm in my late 20s, right? So this is one of the first times I lost money, got ripped off. So I went to like every single bank. How does wires work? How does this work? What's the holding period? And I went to like 10 different banks, and I kind of understood how the wire process works. And I was like, oh, great. So I learned that for $10,000. We took the money. At the end of the day, he took the money, took all our money. It was a lesson learned. Granted, yeah, that business partner I had who brought me the deal, he's not my business partner anymore. Wasn't just that one deal. But in this case, yeah, I lost money deal. And that's where it's like, hey, put skin in the game. This is something that was brought to me by this particular business partner with a person we met actually face-to-face too. So that face-to-face type of meetup, hey, you guys still drill down a little bit more. And recently I had an investor in my company who he actually was asked to run someone's business. And I'm just going to stay high level here because he probably doesn't want this getting out in public too much. And he raised about $5 million for this gentleman, met his whole family, and poof, one day a guy just left. He had a very good product, and he was going to go in and be CEO of the company, and guy disappeared. So now he's just Mr. Negative Nancy. He goes around like, what's going on with this? What's going on with this? I'm like, I'm not this guy. I'm a business. I'm running a business. I'm not this guy who kind of, ripped you off here. He lost a good amount of money, but hey, I'm a pretty transparent guy here at the end of the day. Very, very big is the investor relations component, right? How do you do that? So after you've raised the capital, how do you manage that relationship? Everyone has their own way. It's like a box of chocolates. Each one is different. So you really got to hold the line and say, this is the way I communicate. Again, the right investors coming in, the right transparency, how you communicate. That's how you build relationships here. So, went over the 5 types of investments. Went over like, hey, some of my real life experiences. And so let's be positive. One day I remember I'm working on this transaction. Guy working for me, we need to get $750,000 in this deal. And he's like, I'm really having trouble, Craig. Well, he didn't use those words exactly, right? And he's like, okay. And I'm like, I don't know if I have anyone like this. And I remember I had this list, just a list, like it's like a old paper or something, because it was like it was wrinkled, right? So I just go down the list and I just start cold calling. It's like, let's get this deal done. So here's a couple of pages for yourself. So I start calling, and then boom, by 1:00 I found a couple doctors. And that being said, I got the deal. The doctor said, yeah, we'll love to check out the project. Within, I think it was like less than 48 hours, we got the thing funded. And that was just kind of going in, having the confidence, I'm going to get this done. I had experience this time, right? And so just calling. I knew this list, they came from people who were more, let's fit the category into the professional investors. So I knew what they were looking for, what kind of yield they were looking for. And I just hit the phone. So I go back, say KYC, know your customer, KYI, know your investor. Same thing, it was easier to do. So I had a product, went down a list of people who bought that product, and just kind of matched it together. So it was something that I don't find too hard to do. You just need to have the confidence to do it at the end of the day. In this case, that's a perfect example of, again, a win. It was less than 24 hours. It was by noon I got it done. I started in the morning at 9. Just call. Boom, boom, boom. Hey, you might know sales techniques. It wasn't too hard for me. They're like, well, how'd you get my number? I'm like, hey, I'm in the industry. I was at an industry event. And this gentleman gave me wasn't sure about his name. He just gave me And he gave me your contact information. Figured I'd give you a call because you said you buy this type of product, and he wasn't doing it anymore. And the guy's like, okay, let's talk. And that was it. That was simple. I didn't say too much. I didn't say too little. It said just enough. I didn't oversay things. That's another thing. When you kind of talk too much, it sounds needy. It's like, and whiny and desperate. And that's something you don't want to sound like when you're raising capital. You want to be confident. You want to let them understand this is an opportunity for them. They're not doing you a favor. You're doing them a favor. You're the one working hard. You're the one who had to go find the investment. You're the one who had to develop a company. You're the one that's going to do all the work. They're just going to give you, they're a silent partner. They're going to give you money, and you're going to make some money for them, right? So they're giving the money to their bank, just sitting there. They're giving the money to the stock market. They're giving money to crypto. And the same thing, they just sit back, and that's all it is. So you're doing the work, you're giving them an opportunity. It's a very big mindset, and that mindset comes from confidence. So when you're picking up that phone to raise capital, or you're doing that meeting with someone face-to-face to raise capital, you need to have that confidence. You need to have that mindset. And you got to look at yourself. It's not cut out for everyone. These are things that, I don't know if people really are being honest with themselves. This is part of business. This is the key to stuff, is how do you raise capital, right? It's part of building a business. It's part of a company. If you're a huge company, yeah, it's institutional capital. It's a whole different game. I'm a more small, medium businesses and real estate. That's where I am. Maybe some venture capital. I have a lot of reps. A lot of reps at the end of the days. And one of the things is kind of really getting honest with myself too at times. And in this market, it's different, right? So those techniques I used probably don't work today, but some of the basics do work. So I've mentioned, hey, data. I mentioned know your customer or know your investor. I mentioned knowing your shit. I mentioned transparency with your fee structure and your legal documents, right? So these are still things you need to do today. These are things, since we're in this world with AI, it's going to find out and pull all that out, right? So you need to kind of get your ducks in a row and have everything aligned up. So if you have a website, aligns, and you're talking your fee structure, should align your legal docs, right? Everything should align across everything you do. People can do research for you online. Well, I don't know about that anymore, right? I think that research online is a great thing. You could do it. You go there, let me type this in. But really, what I think is the game changer today in this market, this is my thing, this is what I'm telling you, is a little old school, a little face-to-face. Because now there's fake videos out there, right? There's fake videos, there's clickbaiters, right? There's disgruntled people. Let me tell you, I've had a lot of customers, and one customer disagrees with you, they could blow it up online. Doesn't make you a bad person, but they can do that. And so how do you deal with that? Do you want to spend like hours a day just fixing your online reputation? Or you could just be like, hey, you know what? This, for people who invest in my company or invest with me, I like to meet them. So I know you live here. I'll fly out to see you. Granted, I'm not going to fly out for a $5,000 check. Might be a $5 million check. But today, what I'm doing is meeting with people. My mandate over the next 2 years, develop a product, which I love for this market, and anyone who invests a certain amount gets to meet with me and gets my personal cell phone number. Full transparency. I have all this online stuff. And you're like, Craig, why are you doing this? It's like, the market's changed. Everyone's like distrustful from that last market. We got to regain trust with investors. So yeah, branding. Are you doing branding? Well, branding and social media, it's drowning right now. And everyone's selling you stuff. These guys are selling you a bag of false goods. Hey, let me do your Instagram page and get you 1 million followers. Yeah, they're in India, right? They're in China. They're in Africa. They're not. Are they your customer? Then someone else goes, hey, you just need 1,000 of the right customers. All right. So do you think a sophisticated investor is like on Instagram and YouTube all day going like, yeah, I'm gonna go find my investments here? Let's just ask yourself that question. You might get a few of them out there. No, they're not. Where are they? They're around you. They're probably walking around you at the coffee shop. Brings me back to when I first learned. It was 1997. I ended up moving to La Jolla, and there's this coffee shop called the Panikin. And I remember one of my friends, and I could call him a mentor. He's a good 10, 15 years older than me. He goes, Craig, one thing about this place, he goes, see that guy? He's wearing a t-shirt and flip-flops. You know what? He married Ray Kroc's granddaughter, Ray Kroc from McDonald's. And it's like, and the point being of this was that you look at him, he looks very disheveled, just a t-shirt and flip-flops and board shorts, because big surfer community. And everyone around you, he's like, this whole area, everyone around here, a lot of wealthy people around there. And I got to know who was who. You never know what they look like, is my point. And so one was just like, everyone I was interacting to, you be nice to. If you're going to order the coffee from this place, be nice to that barista. I believe that's the name. If you're the waiter's waitress, be nice. Or going to a situation, be nice to everyone you see, because you just never know. And that's the thing. But nowadays, it's around you. People are around you, is what I'm just trying to say. So you got to just hold yourself well in public, and then put yourself in a situation to meet people. I was in the right part of town, right? I went to a place where I could meet people. That can help out. I know what they say this about startups. Yes, go to Silicon Valley. They're saying Austin and Miami are good as well. But if you really want to be with the best, just move out there. Surround yourself. Get to meet people. But going back to just what I said is just this online presence that we stick on paid ads, Facebook ads. These are complete strangers trying to get to know you. They're reading stuff online about you, whether it's true or not true. Your character's out there. But a lot of things I do in life, I don't put online. I'm not like, okay, you know how I get up each morning and I hug my daughters every day. I'm not putting that on a social post. I don't put my wife online. I'm a happily married guy, and I don't put her online, my personal stuff. So how are you supposed to know my character online? You're probably knowing a caricature, not my character online. So there's a big difference. And people keep telling, you gotta do it, you gotta do it, you gotta do it this way. Well, take a step back and look at all those people online right now. A lot of these people of influence and influencers, there's two differences, right? Influencers is someone, I believe, who's online, who's got an image, want to make some money off their image. And then there's a person of influence, is when they talk, they're giving advice to people and actually helping people. So if I had a choice, influencer or a person of influence, which some people might think it's the same thing, rather be a person of influence. It's completely different. An influencer wants to make money off you. A person of influence wants to educate you and give you tips and try to make I believe, the world a bit better place, right? And that's the difference. Just my opinion. So, as I'm talking here, is that's where the face-to-face comes in. AI generated video. They are so good nowadays, these videos, and you're watching them, and I get sucked in a rabbit hole sometimes. I'm watching some of them on Instagram. It was like pretty cool. Geek out with this stuff at times, but look at it. But it is. It's like those relationships, right? You only have so many hours in a day, and you're like, how do I do this online? I could get millions of people. I'd say that's top of the funnel, right? And get that, and then kind of, okay, now in there, if you're spending all your time there, but you still have to get them middle of the funnel, or is with a meeting, is get them to know. So one of the things we're doing, I'll give you a really good perspective here. What I'm doing, this is a great tip for you to raise capital. I have 1 million people in my database. And so now we're segmenting our funnels on who's the most active, right? And then we're cross-referencing the data we have. I got to talk about the data. KYC, know your customer, as much data as you can. And then we're inviting anyone in Southern California to our office so we can meet them face-to-face. I have a smaller goal, right? I don't want 30,000. I want the right customers, around 100 customers this year. And this is how we're going to do it. We're going to do a lot of face-to-face, and then I'm doing a lot of live events so people can see me and get to know me, where it's interactive, not me controlling the narrative all the time, but people coming in and asking me tough questions. A little Charlie Kirk style. I don't mind going to the heat of the battle. As long as the other person's there, we'll talk it through. You're not going to agree with everybody online. There's a lot of clickbaiters, a lot of people who disagree. That's fine. There's a lot of opportunity for people out there, I believe, but this market to raise capital, let me give you another trick on how to do it. Now, I talked about this market, what I'm doing differently, more face-to-face. Yes, the brand, it's top of the funnel stuff. Limit your time. So how much time you're putting to that. So make sure, it's like, how many face-to-face meetings are you having this week? Are they qualified, right? Qualified's a big deal. So how many qualified face-to-face meetings are you having? Well, I would do that. That's a measurement. We got to figure out how much money to raise, of course, right? But you could go always up the chain. If you need to raise $1 million, maybe 4 people at 250, 10 at 100 to do that. Well, if you think close 1 out of 3 people, can you do 30 meetings in a month? 30 meetings a month is what? 4 weeks in a month. That's about 7.5 a week. Can you do that? Okay. Maybe you want 250,000 then 4 people. Okay, get 4 people. Can you do 5 meetings a week? Maybe close 1 out of 5 qualified people. Yeah, that's more doable. Okay. And how do you do that? Do you have the network to do that? So you see how I'm reverse engineering things. Make it sound easy. I think it is easy at the end of the day. You need to have intent, right? You need to find out where they are and, close that gap, right? And there's a gap there because I'm going really, really, really quick, right? Because it's not everybody knows. Again, let's start with 250 and I want to do 5. The point is 20 people with $250,000. So it's like, okay, I can't. So I have to go that next level. I have to go that retail level, or maybe I go that professional investor level because that's sometimes easy to find in some cases to do it. So, but today's market, we're talking about today, the face-to-face, definitely the face-to-face. The other thing is the deal. What kind of deal? What kind of product are you selling? A lot of people just got burnt last couple of years. A lot of things are coming due. The free money is gone, right? We have the biggest increase in cap rates in the last 40 years in the U.S. So commercial property has been hammered from office. Now, the other day, people like data centers. Data centers aren't doing so well. That was kind of predictable, by the way, because everyone's talking about it's usually too late. So what kind of product are you selling? So your product has to be dead on. If you have a great product, the money's out there. So that's why I would focus on the product. Well, that's hard, Craig. I'm not a guy. I'm not a tech guy. I can't develop a product that's going to feed the world or whatever. Okay, let's go a business. Maybe you're buying a boring business. Maybe it's a car wash, which got in fashion. So maybe not a car wash because everyone's been doing it, or a laundromat. Everyone's been doing it. But maybe a brick and mortar business somewhere, and you got a good deal on it. And you've run a business before, or you have something that proves that you're an operator, but you bought it at such a good deal and the numbers make sense. Okay, that's a good product. A real estate. So let's talk about real estate. Real estate's a big thing because there's no barrier to entry. The only thing that is easier to get into than real estate is marketing. And so that's a big thing. You don't need a college degree for marketing. You don't need a high school degree for marketing. There's no certification to be a marketer. You could put a profile online, talk to Chat or Claude or Perplexity, and put a profile up in 24 hours, create a website saying you're the world's best marketer. No barrier to entry. Again, so watch who you listen to when it comes to things. And real estate, barrier to entry, same thing. There's no barrier to entry there too. So anyone could do it. But not anybody could raise the capital. But anybody can find a great deal. If you find a great deal, you should be able to find the capital. So if you have a smoking deal, granted, yeah, this is where I'd kind of maybe, if you don't know a lot of people, put it online. So you need some sort of online presence. This is where kind of we could talk, right? This is where I could personalize your approach depending on who you are and how to get that done. But hey, I have this fucking smoking deal. Today, this property is worth $5 million and I could get it for $3 million. So it's not that it used to be worth $5 million. It's worth fair market value is $5 million and the end for $3 million. Those are the type of deals that are out there. Knock on my door because I'll take it down myself. I could one call away to taking that deal done. I could help you out, right? Granted, you probably don't want my terms, so my terms will be my terms. But this is if you have a smoking deal, you can get funding. Here, one person, myself, right? That deal being smoking, and there's different ways. Maybe you take it all the way to the finish line. You keep it. Maybe you just give it to somebody else and get a fee, get in and out. But a big thing is maybe you partner someone and get the track record going. I think that's important to get that track record going, to take it from idea stage to acquisition stage to fulfillment stage. So, you got to look at this like, hey, maybe something that size, I can make $300,000 real quick. Do I want to do that? I've been there. I've done that before. I've done the quick one, and I've done the one where I hold. And what I got to tell you, both. That's my answer is both. I was doing this, fixing and flipping after the crash, a new thing, and I was doing 3 things. I was lending on it, I was sticking renters in some, and I was selling them. And I partnered some guys that needed the cash flow. And So they wanted to sell real quick because they need to pay the bills. And I was looking at the long game. I was like, man, if I hold some of this stuff, I'm going to make some good upside. And I did. I did and made some great upside. I held some. And then the other side was, and then some were just, I saw, I was able to just lend on too at the same time. So those are my three ways when I did it back then. And I'll go a little bit down this rabbit hole. When I was selling them, I knew specifically the areas and the class was, and this is more class C stuff. So when it hit a certain number and I saw how the offers came in, I sold. And so some of these were like smaller, under 12 units, and I knew someone was using government financing to do it, very high loan to value. And I was like, I can't really wait this out. I don't think this is going to appreciate as much as a Class B or Class A property. So I got out pretty quickly with that and made some really good money because I got in. My cost basis was phenomenal on those, was under the cost of the land at that point in time. And so I got out. So it's kind of understanding your asset too and how that works. Anyway, we're talking about raising capital, and I'm going off on tangents here. And these stories are there to help you out, to help you get good at this. If we're really kind of talking more about this, and I could really talk about this. So again, in the beginning, I do have these things called the 12 commandments and how to do it. There's a science to it, right? It's not an art. There's a science. Today, who is going to have money in this market? Don't think of who invested before. So you're calling someone up who invested 2 years ago, maybe 2 years is a cutoff, 3, 4, 5, 6 years ago. They have experiences. I've mentioned a story of this guy who invested in my company, another company, lost all this money in the other company. Now his attitude is like, I lost in your company. No, you didn't. You lost in the other company, right? He ain't going to invest. Or the guy who I called a few weeks ago or a couple months ago who lost money in some real estate deals. Not me. He ain't going to invest. So who's your customer today? Get to know your customer. What they want, what's motivations, what kind of risks do they want? Do they want income? Do they want growth? Are they willing to put their money somewhere that they might not see a return in 3, 4, 5 years? Some are. Are they someone who wants that cash flow immediately? What's your track record, right? Do a self-analysis. Why you for this person? Do your personalities match? Is this someone that you can work with? Is someone who's high touch? You got to really kind of get your customer. There's a lot of thought has to go in this. You got to do a self-audit on yourself. Why you? Because remember, at the end of the day, they're not investing in the project. They're investing in you. So why you? Yeah, the project has to be right, but still, why you? And when you have them on the phone, very important, every question needs to be answered in that first conversation. If you can't, you lost them. Every single question answered. And then when they come in and they need something, you didn't get it to them, again, trust is gone. That trust is so small today because it's not you, it's everybody else. But what you can do is control yourself and control that trust. Whether it's a previous customer, a new customer coming in, the questions, you need to have all your questions answered. All their questions answered. Not your question. If you have questions in your head, that's a confidence issue, and then you lost the deal. It's a mindset issue. Going in, they ask you a question, give them an answer. Hey, if you don't know the fucking answer, just guess at the end of the day, because if you're going to go, let me get back to you, you're gone. The guys, they're not going to call you back. It's impossible to get people on the phone today. And then where do I farm? Where do I farm people? Who are the people I should approach? Well, who's making money today? Let's start there. Maybe oil people? Maybe people who are in oil right now, right? They're making money. Price per barrel went up. Someone's making money. There's always people making money. Yeah, it's less. When markets are liquid, more people make money. More people make money, it's easier to raise capital. Let's get that supply and demand. There's not a lot of capital out there, right? So there's always demand for it, but there's a very low supply. So flip it. That means that person has a lot of choices to make. So why your product? So you got to figure out who out there is today's target audience for you. Professional investors are always around. They're going to want better deals. Again, let's get back to getting a great deal for them. So you see, you're seeing all the science, all the pieces together, right? The deal has to be right. I have to be targeting the right people. These people have to be like, hey, is there a new supply of money? All right, you get this. I have to know when I'm on the phone, I got them. I got to sell them quickly. So that really decreases your chances? No, it will increase your chances because I'll tell you everything you need to do. on how to do it today, because that's all it is. It's like every box has to be checked. Every box has to be checked. You check every box, that's science, that's not art. Then you will get the money. So raising capital, it's not just about the money, it's having the systems and science behind it. I have it, I've done it, I could teach you. Hey, if you want to learn more, follow me. I'll be talking a lot about raising capital, a lot about investing and how I invest over the years, a lot of experiences I have, and some of the new great things that I'll be building, and maybe some new experiences I could share.